Good evening, everyone. This is Troy Richardson. I'm the founder of the BHNI, Black and Hispanic Nutrition Initiative, the program that is for anybody and everybody, but our focus is on the Black and Brown communities. Tonight, I am so just overjoyed and I feel honored and blessed that I have this gentleman that's going to be the moderator and presenter for the ERC webinar, Employee Retention Credit, Mr. Lincoln Barringer, representing Jorns and Associates. So without any further ado, we're going to get right into this. Mr. Barringer, thank you so much, sir.
Hey, Troy, thank you so much. I think everybody can feel your energy from miles and miles away. And I just want to say thank you, Troy and Phyllis, and whomever else was part of getting some folks on this line. Let me share with you why we are here right now. I got a call from a dear friend that I knew for decades back in November, December, and I talked to his older brother shortly after that phone call in regards to the employee retention tax credit. After meeting with his brother, Damon Mintz, who is the Chief Revenue Officer of Jorns and Associates, I put my attorney and my CPA team that I've had for 25 years now, give or take, on doing due diligence on the employee retention tax credit. And I'm going to say it in layman's terms, then I'm going to introduce a couple of individuals, and then I'm going to get into the program. First and foremost, what they found in layman's terms was this, is that during a once-in-a-lifetime pandemic, there were government funds that were set aside for businesses that stayed open, retained W-2 employees, and then also, on a huge note, are absolutely entitled to these funds should they qualify. And we're going to talk about qualification quite a bit and why most traditional CPAs and accountants may have not mentioned this to their clients yet. And it's very simple to Google the employee retention tax credit. However, it is a complex equation to get to qualification and then how much. So I know that we have several business owners on this line. And with that, it's one of those things where you got to realize these funds are sitting there for you. Most of the people that we talk to have taken out PPP. Most that we speak to maybe got some guidance that maybe they didn't qualify or would have a hard time qualifying. I would like to answer and get some clarification by the time we end this call with a couple of those questions. In addition to that, I'd like to mention that Jorns and Associates has helped out 5,400 clients from sea to shining sea, everything from other CPA offices to landscape, construction, private schools, and where my passion is at and where I saw this vision was to make sure that we hit as many nonprofits and ministries and philanthropic organizations, foundations that we possibly could. Because here's the deal. If we do not do something with the funds that are there at the end of the time, which is going to be in years 2024 and 2025, the government's going to decide what to do with these funds. I think that it is not a business right now. This is a mission of mine to make sure that you, if you're a business owner on this line, get that money out of the government and put it back into our communities where it belongs. On the call, I do have my brother. He is the newest member of Rhino Fin Consulting. Todd, thank you very much. I know that you took a huge leap of faith to leave education. My brother is notoriously known for building STEM labs around the country and just being a true leader. He passed up a position to teach leadership classes so that we could help you guys out, to help all the business owners out there. I tell you why I got involved was I had a huge book of business in the insurance industry. And then my consulting firm needed to happen and help out additional companies. I had about 12,000 clients, and now we are trying to get as many of those enrolled that do qualify into the employee retention tax credit. So Todd, thank you for being on. Should you be a business owner on this line, Todd will be helping out with many of the steps to make sure that you do or do not qualify. Make sure that if you have questions, he'll be the liaison in between any piece of the process, which is quite simple. We also do have Brian Heath on the line. He is all the way from the great state of Maine. He has helped out tremendous amount of companies already. And Brian, I may even have you at the very end share just a quick testimony of what just happened with one or two of your companies that you got involved with ERC back in February, I believe it was February or March. So I'm going to share my screen, and I may not get to all of the business owners on this call, but can somebody give me a thumbs up or just let me know that you can see my screen and you can hear me clearly? Okay, thank you. So with this, Jones and Associates is not a traditional accounting firm. We do one thing. We deal with complex tax situations. Rhino Fin Consulting saw the opportunity for Jones to grow. Jones needed help with acquiring customers. And right now we're half of Jones's business from coast to coast. In the bottom left, you'll see our PTIN number. We are a paid preparer for the IRS. We only focus on one thing, and we're not looking to do annual tax business. Our CPAs do not do that. We have a staff of 200 individuals that work for Jones directly, and we've returned $3.5 billion back into the communities with the employee retention tax credit. Now, I do want to learn a little bit about your firm and answer these few questions. How many employees do you have? Have you received PPP? If so, was it forgiven? And what do you know about the employee retention tax credit? And I'm just going to name one or two people off here that I see. So Dr. Sarita Graham, I believe that I saw you earlier on the call, and I can't see the pictures right now, but are you a business owner? And if so, can you just go over how many full-time employees, because this will help me kind of guide part of the employee retention tax credit education here.
Okay, we have a total of 3 full-time employments. And our payroll account that handles all our payroll is ADP handles all our payroll. But I give 1099s. So I don't know if I would qualify for it. And I did apply for the PP loan. I got one from Bank of America, and then I got one from Academy Bank. Academy Bank, they waived all my fees, but Bank of America is making me pay back.
Okay. Well, very good. And out of those 3 employees, are they all 1099?
Yes, we're all 1099s because we're kind of small.
Yep, and I'll get into how this works in just a moment with 1099ers. And Dr. Annie Myers, I see you on the line as well. I'm not sure if you're in a position to unmute for a moment, but could you share how many employees you have, and did you take PPP out? Was it forgiven? And what do you know about the ERC?
I'm just learning all of this information from Troy, but I just started my nonprofit about 1.5 years ago, and I don't have any employees. I'm just listening to gain the knowledge. All
right, well, very good. And as we go on here, the one item that I would mention is that, maybe this will be great for you. Maybe it won't be part of, what you're doing. However, think about all the nonprofits, the ministries, the philanthropic organizations as we do go through here. So I do want to share how this works. So the employee retention tax credit, it's an economic stimulus payment. It came about during the CARES Act, obviously in 2020 when the pandemic hit. There are very large misconceptions about how a business would qualify. So I am here to talk about 3 things. In the next 10 minutes, I'm going to go through all of them, and they're all quite simple to understand, but it's a complex equation to come to the bottom line on. The Biden administration made 3 major changes to the ERC in 2021. And it came about in 2 acts, the Consolidated Appropriations Act and the American Rescue Plan Act. The first major change was this. In 2020, if you had 100 or less employees that were W-2, you could qualify. So to answer Dr. Graham's question, you cannot qualify for the employee retention tax credit if you have 1099 employees. And I'm going to explain why on the next screen. But it all came about for W-2 because the government set aside and earmarked money out of Social Security and Medicare, 100% Social Security and Medicare when it comes to the ERC. So if you had 101 employees in 2020, you would not be able to qualify. Now, if the major change was this, it went from 100 to 500 employees. And that was huge for a lot of companies because they could not qualify for the ERC in 2020 if that rule would have stayed the same. So first change that the Biden administration made, it went from 100 to 500 employees that would qualify. And here's how it works. It's a fully refundable tax credit against that portion of Social Security and Medicare. So unfortunately for Dr. Graham, if those employees were 1099, they're not going to be eligible for the employee retention tax credit. So they have to be a W-2 employee. Now, when some people hear tax credit, they think that it might be a credit on next year's taxes. That's not the way that the ERC works. This is a United States Treasury check. I'm going to show you several examples of real clients of ours that gave us permission to show that comes to you through the United States Treasury. Here's the great news. It's not a loan. It's not earmarked. You can use the money however you want to, have to, or need to, and there's no discretion on how you utilize those funds, which is why it's so very popular right now. The way that it works is by amending the 941. Now, there's several things that have to go into this, but we amend the 941. It's called a 941X, and it happens on lines 18 and 26 of that form. Now, there's two other parts and two other changes that the Biden administration made, the how much and then the how to. And even though both of these are used to determine the criteria, both are very, very different. So the first thing with the how much is, where was it at in 2020? You could get up to $5,000 per employee, and that represented the period from 3/13 to 12/31. So what we would be looking at are any W-2 employees you had from 3/13 to 12/31 of 2020. That comes in quarter 2, quarter 3, and quarter 4 for a total of $5,000. Here's the second major change. The first change went from 100 to 500 employees. The second change was even greater. It went from $5,000 per employee to $21,000 per employee. So if you do a quick Google search on what it even is, the employee retention tax credit, you're going to see that most companies are eligible for up to $26,000. For some of the business owners that may have not been able to get in touch with me, or we haven't talked yet on this line, if you took PPP out, we're averaging about $20,000 per employee for both of those years, because there was a small piece of the PPP that did indeed have to do with Social Security and Medicare. So if you took PPP and you're under 100 employees, you would be looking at around $20,000 per employee on our averages. If you didn't take PPP, you're going to be closer to that 26,000. Now, 95% of our clients do not believe that they qualify based on just misconceptions. The biggest ones are, I didn't have a revenue decline, I did better during COVID, I didn't shut down, I took PPP loans out that kind of got me by. And even though these are factors, they will never disqualify you. So this is what happened in 2021. Remember, the first change was 100 to 500 employees. Second change was 5,000 to 21,000 for a total of 26,000 eligible dollars out there for you. The third is the most important. So if you happen to zone out, zone back in here, because we can help out a tremendous amount of businesses because of this factor alone. Comes down to qualifications. In 2020, the IRS stated in the rules and regulations of the ERC is you had to show a gross receipt reduction in 20 and 21 versus 2019. Now, we still have a few clients that qualify for this, but 95, 96% of our businesses that engage with Jorns, they don't qualify from this 2020. In 2021, here's what happened. All of these are new qualification processes in the IRS guidelines and the Consolidated Appropriations Act and the American Rescue Plan Act. Now, I'm going to take a lot of these away because the majority of our businesses are qualifying because of a revenue sector showing a decline. And I think we have a CPA on the line. Let's even define that. So in the IRS code, it states that a nominal effect had to happen in a revenue sector for them to qualify for the ERC. Even if gross receipts were up, as long as a revenue sector was showing a nominal effect, which is defined as a 10% swing, very, very clean, crisp, and organized the way that it's written, they would qualify. Let me give you a couple of examples. Car dealerships, for example, they did very well during the pandemic. Used car sales skyrocketed. And right now, you'll pay 20% more for a used car than you did in 2019. And Troy, they say that inflation is only about 8% right now. I think it's a lot more than that. Used car, you're paying more than 20% more. Anyways, that's a whole nother conversation, right? However, new car sales, they could not get new cars in because of supply chain issues. So a revenue sector changed. Restaurants, huge. If you know anybody that owned a restaurant, their indoor dining had a revenue sector decline. If you would have seen what happened with drive-throughs, if they had a drive-through window, but especially delivery and takeout, that revenue sector skyrocketed. We just had a client that did very well. They were in the rock granite construction company. Their biggest client was out of Venezuela, and they had 40% of their revenue coming from this specialized granite out of Venezuela. Well, they couldn't get it. The supply chain stopped all of that, but their limestone sales went up. That's a revenue sector showing a decline. When I'm talking to churches and ministries, when the doors shut down, even though nobody's supposed to be able to shut the doors of a church, the in the basket tithing went way down. Online giving, donations, and tithing went up. A very clean, crisp, and organized revenue sector decline. And then the Biden administration expanded the qualifications as well. Maybe you had to incur additional costs or expenses. Possibly you had trade shows or conferences, had to go virtual. The way that you engage with your customers and prospects, we have a considerable amount, hundreds and hundreds and hundreds of doctor office visits, or doctor office clients now that have qualified because they had to change a lot of things to see their clients. How they engage with their customers. The list goes on and on. I do not want to put you to sleep, but this is what Jorns does. They dissect the pieces of your business to make sure that you properly qualify. Let me say this once, and I'll probably say it again. If we can qualify you, which may not be for every quarter of 2020 or 2021, we're going to do that. Now, I'll share with you software that guarantees that we will. However, if you don't qualify, there's no financial risk, and we will let you know that you don't qualify as well. Through the qualification process, we have customers that have had warehouse and supply chain operations that were impacted. They lost a key customer or a key supplier that didn't make it through the pandemic. And these are the most important piece of how we get folks qualified for this. Now, this is an actual check. This was one of our very first clients. We actually filed this before they had to file for taxes, but you can see that on this check that it was a Q2 2021 941 refund. 6 of 2021, that's the end of the Q2 quarter. And then you can see the amount that they received. They were quite happy. MGDOW 1, if you're familiar with Ohio, this is part of the Bedford Auto Mile and a car dealership. Set Joe Inc. is part of the Bedford Auto Mile as well. It's a Kia dealership. You can see that this was from Q1 as well, and the amount that they received. Now, here's a construction company that recently got their refund check, and you can see that this was from Q2 of 2020. Now, here's the fun thing, is that because they had already filed, and this was an amended 941X, you can see the amount, but there's another amount. The government will go back however many days it was from filing. And because this was from 2020, in this example, and this is not just an example, this is one of our clients that received their checks that provided us so that we could show it and share it. They got $1,848 and change of interest paid from that filing. On the bottom, you can see that in Q4 2020, interest was paid on that for 117 days. So it's pretty nice because we'll come up with the preliminary numbers, sign off. Those numbers are 100% accurate. And then you'll get a little bit of interest. Right now, they're paying around 4%. depending on how many days and what quarter it was. Here was a church that we had helped out. This was in Q4 2020, 941 refund. You can see that they received a small check for 2020, and it had interest paid of $189. On the bottom, this was a Q1, 941 refund, interest paid, etc. We have a custom iron and woodworking company, same thing, where you can see that this was in Q3 2021, F941, REF stands for refund. You can see where the interest was there, and so forth and so on. So the neat thing is that we come up with the numbers are to the penny, and then the IRS will pay interest depending on what quarter it was for. There's a couple of things that the business owner needs to do though. And there's another screen where I'm going to go in depth on this, but basically on the left-hand side where you see it say you, there's some information that we are going to need. On the right-hand side, what we do is we coordinate all the tax items, all the payroll items, the document qualification, the wage attribution, and then we do file the 941X on your behalf. Now, we can't guarantee any specific refund amount, obviously, until we have the payroll data. We can talk general numbers. If you didn't take PPP, you're probably going to qualify for the $26,000. If you did take PPP, you're probably going to average around $20,000 per employee that you retained during the pandemic. Now, what we do guarantee is that once you have the payroll data in, our CPA team goes to work. Our onboarding specialists go to work. Our analyst team goes to work on your behalf, and we guarantee that our calculations are accurate to the penny. We also guarantee that our filings with the IRS as a paid preparer follow all of the program rules, all of the regulations. George is on the line with the IRS at least every 4 to 6 weeks to make sure that we're following every piece of the ERC. We go above and beyond to make sure that if anything did change or would change, that we know about every change that may occur. And then we provide long-term audit support. The IRS has a 5-year look back on the employee retention tax credit. Now, if you are going to get an audit, there's no such thing as an ERC tax audit, but 1 to 2% of US businesses and nonprofits will get an audit. Now, that would be very, very rare for any of you to get an audit, but if you did get a traditional audit for the ERC piece of it, we would supply all of the information. You would just need to contact us. If there was any errors, which I can tell you there's not been any errors and there's not going to be, we have $1 million limit per claim, which is $1 million per quarter. So with that, we provide that long-term audit support, which is important. There is no financial risk, as I mentioned earlier, with Jorns because we operate off of a contingency fee of 15%. You don't owe that amount until after you receive the refund. There is a one-time fully refundable deposit of $2,600 due at signing, and I'm going to share with you how that deposit works. We have a small handful, 96% of our businesses qualify for at least 1 quarter, if not many. 75% of our businesses end up qualifying for all 6 quarters. So we have a small percentage that don't, and we spend a lot of time, money, effort, and energy with getting to the point of qualification. If you don't qualify, you get that $2,600 back. If you do qualify, which 96% of our companies are, it would be that 15% contingency fee minus the $2,600 that you would owe at the time that you receive the refund. Our software, which I'm going to talk about, we initially invested about $500,000. We just invested another 7 figures into what's called MAP software, which I'm going to talk about in just a moment, because it's very important for the calculations and qualifications to make sure that we do the best we can for our clients. We are the only company right now that has this proprietary software, which we're very, very proud of. I've already mentioned the Audit Ready package. Now, let me talk a little bit about the MAP software. When it comes to filing for this employee retention tax credit, clients are only allowed to maximize the wages that are used towards the PPP loan forgiveness and then the ERC calculation. So if you took PPP, which most companies have, what happens with our multi-application processing system, also known as MAPS, we're yielding 15 to 20% more than any other company out there because of the MAP software, and 90+% of the companies took PPP. So what we do is we calculate that, and in layman's terms, we will do a wage attribution because some companies had higher wage earners versus lower wage earners. And that matters when it comes to the final calculation. And I'll give a real life example of one of our clients here. So in 2021, they had already filed for the employee retention tax credit. They received $688,000. They said, we want you to review it once again. Let's send it through your software. We ended up getting them $850,000 just for 2021, a difference of $162,000. In 2020, they received $262,000 initially. We ran it through our software. That was a major difference of $211,000 extra that was sitting on the table. So if you add that up for just this one client, it was a larger client of ours, we ended up getting them an extra $373,584.27 in new recoverable employee retention tax credit because of this advanced software. That means that they received 33% more than if anybody would to work on this for them. So basically that 15% fee, they ended up getting 15% more. And our average right now, like I mentioned on the last screen, is we're averaging 15 to 20% more in ERC refunds properly filed, properly qualified for our clients. So with that, let's talk about next steps. If you're a business owner on this call and you want to engage, we would send you an email. That welcome email has 2 items in it, and I'm going to show you what it looks like. There's the engagement letter that you sign on a secure link, and then there's a second link where you remit that fully refundable deposit that we spoke about. Once those 2 items are done, that's when we go to work with you. There's a little bit of work here. If you have 50 employees, you're going to average 20,000. You're going to get around $1 million back. What I will tell you is that it takes about 2 to 3 hours to get the questionnaire done. There's a revenue spreadsheet that needs completed. We obviously need the initial filed 941s, the payroll documents so that we can do the wage attribution. And then if you did take PPP, we don't need all of the details. We need to know that it was forgiven because there's a different equation for that. If it was not forgiven, we need to know that as well. So with all of that, if you had 50 employees, you'd get $1 million back. If you had 25, you'd be around $500,000. Is it worth 2 to 3 hours of your time to get this together to see if you would qualify? After you get those details in, that's where the onboarding specialist, that's why I introduced my brother earlier, Todd. He is one of them that helps out with this process. And if you have questions, it's very simple. We've made this very, very easy to get that in. And then the CPAs go to work. It takes us about 10 business days to make sure that we've done a few wage attributions, send all the information through the software to get your preliminary numbers. So after you get these documents in, it takes about 10 days to get your preliminary numbers. That's when we do a client review, which means that you now have the 941X document in your hands. Those documents are then signed. And I've only got one piece of bad news about the employee retention tax credit. It's really not that bad news because it's newly found funds for your company, your nonprofit, et cetera. After we file the 941X, it seems like when the government's trying to get money from you, they want it right away or else you get penalized. When they're giving it to you, at least you make a little bit of interest on that, but it does take up to 20 to 24 weeks. Now, I will tell you that we're getting our January, February, March, and even some in April right now, and I've seen it as quick as 12 to 14 weeks. But I still want to say 20 to 24 weeks before the company does receive those checks in the mail. After that, that's when we invoice you for the 15% minus the deposit. So with that, this is what the email looks like. Obviously, it would say, "Dear whomever your name is, congratulations on partnering with Jorns." The top link is a hello sign, which is a secure link where you sign the agreement. You can review this agreement. If you have questions, we'll answer questions about that agreement. But you do need to finish both of the blue links on that for us to get to the next step. So you would sign the agreement, you would then pay the deposit, and that's when our CPA and our onboarding specialists go to work for you. Now, none of the information I shared was created by Jorns or myself. It all came from irs.gov. If you search the employee retention,
Lincoln, you are
kind of remember.
Lincoln, we didn't hear the last part. We didn't hear the last part. If you could repeat that, please.
Yeah, absolutely. So none of the information is ours. All of this was obtained from the irs.gov website. It is the employee retention credit. If you do that in the search tab, you're going to see that the page is not current. The reason it's not current is because it was all the 2020 guidance, but right up on top, it runs through all of the 2021 guidance, which it does take a while to go through this. And not only does it take a while to go through it, that's why we had to invest heavily into the software to make sure we're doing all the calculations properly. But this is where we got the information. We do have a couple of testimonies that we'd like to share at the end here. We had as far as the first one, an orthodontic office that got $220,000 in credits. They were very, very happy. Omar at a financial company did very well, and they had another $500,000 on the way. This was one of our smaller clients, but one of my favorites, John over at Vacuum Pump, his CPA was all over us. And even though he was a small company, he was trying to do what was best for his client, and it was a friend of his. And the reason I love it is that the CPA said, not going to be able to qualify, was on multiple calls, which usually it only takes one phone call with a company to help them get engaged. But there was multiple phone calls, and over at Vacuum Pump, they did very well in 2020, getting $31,000. That was a big deal for them. And now they're getting 2021, which is a lot more than 31,000. But the best part of that story is that after the CPA did a bunch of due diligence, that CPA did not want to do the employee retention tax credit work because they don't have the software to do it. They'd have to invest $1 million or $1.5 million to do what Jorns does. So they're referring clients to us left and right. I just think that's pretty cool. And then on the bottom, we look with car dealerships, it's so, very clear that they're going to qualify. And this is just one example with Mr. Bell, but they've received over 2.4 million in ERC tax credits, and all the car dealerships are very, very, very happy with us. So with that, I'm going to stop here. What I will suggest for all of you, and I would love Q&A if you guys do have questions, I'll answer any of those. And then whoever put you on this call, which was probably Troy or Phyllis or Weller or whomever, if you could get back with them, they would need a little bit of information to get your business started. And by started, I mean that we would get that welcome email out to you that had the 2 links in it. You could review the agreement. If you had questions, you obviously could ask us, but connect with the person that put you on this call. The one thing I will suggest is when you give them the name of your company, make sure it's not the DBA. However it is on the tax returns is the way that it needs to go into our system to communicate properly with the IRS. And other than that, they just need your name, your email address and phone number, and the approximate number of employees. So Troy, you are incredible. I am so happy to hear your voice again. It's been a little while, my friend. And before I turn it over for questions, Brian Heath is a business guru up in the state of Maine. He's done business. I know how well he is respected. I've spent quite a bit of time with him. And I know that he wanted to jump on here because he was quite skeptical about the process and the employee retention tax credit early on. But tell them over the past couple of weeks what's happened with a few of the businesses that you brought on and how many employees they had and what the approximate returns have been.
Yeah, sure. Appreciate that, Lincoln. I also just want to say something first about Lincoln. I've known him for 3 years or more in the insurance industry. Integrity means a lot to me, and that might be the first word I'd use to describe Lincoln. So if anybody's contemplating getting together or working with the program, Lincoln's an awesome leader there. By the way, I'm very glad to hear about his brother Todd. You mentioned him to me the other day. It seems to me every time I hear about Jorns, there's something more they're adding to make the experience better for the client. So that's very important to me. Yeah, just over the past few days, past few weeks, actually, I was conveying to Lincoln. I have one of my first clients back in February was a 27-person social service agency. If you drove by them on my street in my town, you wouldn't even notice they were there. They were very skeptical. Had been told that they did not qualify by their local CPA. Got them involved with Jorns, and they just received their check 3 weeks ago. 27 employees. It came out to $520,000. Needless to say, they were very, very pleased about that. Where I've taken my car for 30 years for repair, was able to get them involved with Jorns, very small company, 7 employees in that firm. Just last Friday, Steve called and said, "Hey, we received our check for 180. What do I do now?" He was talking about paying the fee, but very, very pleased. That meant an awful lot to them in their business. Just today, I signed up a business owner that has 3 small businesses. We calculated his ERC. I used the 20 as well for the average. We calculated at about $240,000. And on Tuesday at 1:30, I have an appointment with a 145-person oil company, very well-respected businessman up here in Central Maine. And if that all goes through and he jumps on, it's likely just under $3 million would be his ERC return. So very pleased. In most cases, I get people that have not heard about the ERC. They are pleased to know that there's someone at such a high level to be able to handle it for them. And almost all of the people I'm working with are my own clients. So as I mentioned at the start, it's very important to me that they're handled very well. And that's probably the number one reason that I chase this so hard, is because I know that they are going to be handled in the manner that I handle my own customers. So yeah, very, very pleased with the results so far, and looking forward to helping a whole bunch more.
Yep. Thank you very much, Brian, for being on tonight. I know that we have multiple business owners on. If there's any questions that I could answer, I would be more than pleased to do that. I am here to serve. And then if there is any other items that you need after this phone call, get a hold of Troy or Weller, or whomever put you on here. And they just need a little bit of information, and we'll make sure that Jordan sends that email right out to you. Line is open. Well, Troy, with that silence, and if you guys want to interrupt, you certainly can with a question. I do want to end with this. I truly am humbled by what we've been able to accomplish at Jorns. It is a God thing. And I truly have a mission to make sure that we put the dollars into kingdom business, if you will. I think that that's very important. We have many addiction rehabilitation services that we've been able to help out, that I know that that's going to be able to go back into the communities and do very well. A lot of foundations and philanthropic organizations. So even if you happen to be an employer, but they were 1099, such as Dr. Graham there, and I appreciate you chiming in there early on, Doctor. Let's not forget, maybe this isn't going to qualify for you, but it certainly could for many people that you guys know, and whoever that is, make sure to get in touch with whomever, once again, that put you on this call. We've got a lot of work to do, and we don't have much time to do it. There's about 1.5 years left for proper filing, maybe up to 2 years for the employee retention tax credit. And I am here to serve. My phone does not stop. My emails do not stop. And I will get back to anybody that I possibly can. So with that, line's now still open for any questions. And if there's no questions, Troy, thank you once again. Really appreciate you putting this together. And if there's anything else I can do, please reach out. I'm here for you.
Well, we're only just at the beginning of this giving season, Lincoln, and I really appreciate you taking time out of your busy schedule. And folks, as Lincoln said, in your circles, we all know businesses out there. Have them get in touch with me, or if, Phyllis or whoever invited you, but I'm talking to my people. So get in touch with me. Let's spread the word, and let's take advantage of this before the government does something else with these funds. So Lincoln, Berenger, Todd, Brian, thank you all. Phyllis, Waller, thank you for bringing people. And everyone have an amazing, incredible night.